Hi there, accountants. I hope all is well, and I pray that as you're viewing this video, that you're in the best of health and spirit. This video will cover Chapter 5 from QuickBooks Online for Accountant, 7th edition by Glenn Owens. And in Chapter 5, we'll have the opportunity to record operating activities, which includes purchases and cash payments. So it states, upon completion of this chapter, the student will be able to do the following: add a vendor, record a purchase order, record a bill for the receipt of products and services on account, record the payment of bills, record credit card charges, record checks, and prepare a trial balance. So here in this overview, it states that in Chapter 4, you added new accounts, new customers, new vendors, new products, and new services to your Wild Water Sports company. In addition, you recorded activities like sales receipts, invoices, cash receipts, and bank deposits. In this chapter, you would add additional operating activities to the Wild Water Sports company, like purchase orders, bills, payments of bills, credit card charges, and checks. And at the end of the chapter, you have the opportunity to perform similar tasks. So to verify the accuracy of the Wild Water Sports company. So keep in mind, step 1 is asking you to sign into your QBO account. And if you click on this, it's going to take you back to Chapter 4, and I'll just show you. And then you go, it'll take you back to Chapter 3. And then it'll take you here where you can actually, see the link. So what I would strongly suggest is saving this link and bookmarking it, because this is the same link that you are going to refer to every time. So you just want to save it, so that way, when you get to chapters like Chapter 5, you don't have to keep going back to figuring out what the login is. So just keep that in mind. So we start off, we're in QuickBooks, I'm already signed in, and the first thing it asks me to do to click reports. So I'm going to click on the dashboard, go to reports. Here we see we have custom reports. We open up our trial balance, and we set the dates from January 1st, 2027 to January 13th, 2027. We run the report, and we want to compare it to make sure that the numbers tie. So perfect. I see that my total debits are $498,715, and my total credits are also the same for $498,715. So we're pretty much good to go. Now we move on to the next step, and it's saying that in this section, you will be adding new vendors. Recall that vendors are your company's suppliers of products and services. To add vendors, you will use the expenses menu in the navigation bar. So here we open our navigation bar, we click on expenses, and then we go to our vendors, and we click on new vendor. So we type in the name of the vendor. The name of the vendor is TIG. We type in the address, which is 1801 TX Highway. Albine, or Albaline rather, I might be saying it wrong. Albaline, Texas, the zip code is 79602. And then it asks us to select net 30. So, fairly similar. Again, sometimes there's a bit of things that don't look the same, but for the most part, here we see company name, TIG, vendor display name, TIG. We see all of these boxes are blank. The name to print on checks is TIG. Here we have the address, 1801 TX Highway 36, Albaline, state is Texas. The zip code is 79602. And then it also asks us to select net 30 from the terms box. So if we scroll down here under payments, we want to select net 30 to make sure that that is reflected. So we click save. And as it states, you have now added a new vendor. If you need to edit a vendor's information, you would just click expenses, go back to vendors, and then you would select edit. So let's say we needed to edit for TIG, we would select this drop down, or click it rather, the vendor, and then at the very top, edit if we wanted to make changes. All right, so now for the next step is asking us to record purchase orders. And a business uses purchase orders to formally order products or services from its vendors. Purchase orders are also used as a reference and control for products received. During the creation of a purchase order, you can create a new product or refer to an existing product. Purchase orders can be used to acquire inventory for future sale or for products ordered for a specific customer. So, in order to create our purchase order, we select our navigation bar. And again, this is how you collapse the navigation bar. And this is how you expand. So we select new from the navigation bar and we select purchase order under the vendor column. So we see we have the customers, the vendors, the team, and the other. We select purchase order under vendor. From the vendors, we can, select the drop down or we can type it in. So we have type. For the purchase order date, here we input the information. We type January 14th, 2027. Next, we select the 25ZX from the product service text box. Oh, sorry, I went the wrong thing. So we go to item details. So just keep that in mind, right? That went quickly. So we went to the purchase order. We chose the name of the individual. We input the purchase order date. And then keep in mind, we have categories. So this is like if we are categorizing it to an expense account or something of that nature. And then we also have item details, right? So under the item details, this is where we are going to input the tag 25ZX. And then for the quantity, it states type 1 quantity. So we have 1. So the purchase order should, look similar. Here we see tag. We have the amount for 180,000. We have the purchase order date. And then we see boats, the description, tag 25ZX, or quantity of 1 for the rate and the amount. So the next thing we need to click is save in new. And then it asks us to click add new from the vendor text box. So we have the vendor text box. We select plus add new. We type in Centurion. Centurion bolts. We add the following address: 2047 Grogan Avenue, Merced, California, and the zip code is 95341. And then from there, under the terms, it says net 30. So we scroll down to where it says payments and we select net 30. And then we select save. So now the next thing is for us asking us to update the purchase date information. So instead of it being January 14th, the purchase order date is January 15th, 2027. And we're going to type in 2023 V 2022. So again, there's category details and there's item details, and we are dealing with the item details. So for the item details, we type in 2023 VI 22. All right, and we see that this product is not already in the program, so we're going to need to add a new product. So we added 2023 VI 2022. Now it's asking us to input the information. So we have the name, the item type. This is not a service item, but instead this is an inventory item. For the category, it will be a part of the boats. We type our initial quantity on hand. It would be 0 as of January 5th, 2027. We select inventory as our inventory asset account. And then a description and purchasing information, we input the same thing. So the 2023 VI 22. And then we need to do the same thing, but for right now, here we have it in the sales section. So we'll stick with the sales section, 2023 VI 22. The sales price is $115,000. And it wants us to select sales of product income as the income account, which it already is. We scroll down to the purchases and we input the same thing, 2023 VI 2022, and the purchase cost is $90,000. And it wants us to select cost of goods sold as the expense account. It's already there, so there's nothing else we need to do. And then here when we get to the sales tax, it asks us to select it as taxable. So we choose the taxable standard rate as the sales tax. Next thing we do is save and close. So now for this section, we type in one quantity to view the purchase order, 1,002. So here it shows it's $90,000. The vendor is Centurion Boats 2023 VI 2022, one for $90,000. So we select save and new. Now we work on another purchase order, TIG, which is the vendor, 1/15/2027. The date is already there. And now from there, we type in the TIG thruster control package in the product service. So we're going to be adding a new one. So in such case, let's add a new one. All right, so TIG will be the vendor. And then we're going to be adding a new product. So we type in TIG thruster control package in the product/service text box. And we're going to add new because obviously it's not there. This is not a service item. It is inventory. This would be under parts. We type parts and we're going to be adding. So we add new for the parts. Then we click save. We're going to type 0 as our initial quantity on hand. And this is as of January 15th, 2027. Our inventory account is going to be the inventory. And then we type in the TIG thruster control package. And the sales description is $25,000 for the sales price. TIG thruster control package. And again, you can do this in any order. All right. So the TIG thruster control package, the rate that is being sold for is $25,000. And this will be a part of sales part in the income account. So we need to add a new income account. So we have sales parts that we're going to add. And this will be a part of our sales of product income. So we save and close. And then the purchase cost, as it lets us know here, is $20,000. So we select save and close. And it should not be here. It's picking up from the previous purchase order. So here we have it. We have two purchase orders from TIG, one for the TIG 25ZX and then for the parts. So we update this, it should show 20,000. So again, this is our baseline. This lets us know if it's recorded correctly. So it matches here. So we select save and close. And then now it starts to show us bills. So it's stating in the previous chapter, you created invoices to customers for products or services rendered. That invoice served as a bill to the customer, signifying a sales transaction for you and a bill for them. Likewise, when you enter into a business transaction such as purchasing a product or service from a vendor, you expect them to send you an invoice. So in QuickBooks Online, the invoice you receive from a vendor is called a bill. Bills are recorded in QuickBooks Online to signify the receipt of a product or service and a related liability. So what that simply means is that in QuickBooks, you are recording the fact that you have received a service or a product, but you have a liability, a payable, an obligation to pay in the future. So the inventory account is affected when the bill represents a product being delivered. So in QuickBooks Online, the terms of those bills could be one of the following. It could be due on receipt. As soon as the receipt is received, payment needs to be made. It could be net 10, net 15, net 30, or net 30. So the net reference means that the bill is due to be paid within a specific number of days. So that could be the 10, the 15, the 30, or the 60. But other terms, for example, if it's 210 net 30, what that means is that there would be a 2% discount if the invoice is paid within 10 days. And if not, you have to pay the full amount within 30 days. So these are some features that, through QuickBooks that it can be set up online in the report section and the invoice section. So in this section, we're focusing on recording a bill for the receipt of services and products on account, meaning we've been given terms. Usually it's net 30. So you will not have to pay the bill for 30 days after the bill date. The first bill was for a product received, which has been previously ordered using a purchase order. And the second bill was for a new product, which has not been previously ordered using a purchase order. So both of these purchases are going to affect inventory and thus are recorded in the item details section of a bill. And the last two bills are services that were rendered and thus do not affect inventory and are recorded in the category details section of the bill. So we basically continue where we left off, and it's telling us to click on the new icon. We will click on bill under vendors as shown. So we click on the bill and here we are. So we select TIGE, T-I-G-E. Again, you can use the drop down or you can type it in. We accept the net 30 from the drop down list. So here it is, it's already there, net 30. Then we collapse the category detail in the section by the bill by clicking on the arrow next to it. So we fix that. And then we can expand the item again. So in such case, there should only be 2 purchase orders. I think this one was a duplicate by accident. So I am going to, I'll duplicate this. The other one was created by accident. So I will delete the other so that way there's no confusion. Purchase order. There should only be one of these. So this one is a duplicate. So I will delete this. So go to more, delete. Perfect. All right. So now we go back to the steps, new bill. Again, we can use a drop down to either select tag or we can input it. And again, here we are. We have purchase order 1001 and then we have purchase order 1004. All right. So we see these two. And then we add the bills to the section. So the bill now contains information from purchase order 1. See, click add to the bill section. Okay, so we'll add it. All right, perfect. So we added it, then we select save and new. Let's make sure. Okay, perfect. Now a new one is opening. And then we select Malibu Boats. And again, we could type it in or we could select it. So Malibu Boats. We select the terms of net 30. And then the bill date would be 01/18/2027. And we select add new on line 1 of the bill in the products services item. So here we are. So we add new. And then it's asking us, as a new product, as you've done before, we type in inventory, the product type rather. The name is the Wake accessory package. The item type is inventory. The quantity on hand is 0 as of 01/18/2027. the category part, the inventory asset account is inventory, onto the sales, wake accessory, package. The price is 500. The income account should be sales parts. It's taxable at the standard rate. Next, we have the purchasing information, wake accessory, package, and the purchase price is $350, and it's already cost of goods sold. So we select save and close. Then it wants us to type 5 on line 1 of the bill in the quantity column. So 5. And then we select save and new. For the next bill, it's asking us to type Best by Geek Squad. So Best by Geek Squad. From the vendor drop-down list, we add new. And then we click save to add the new vendor. The terms are net 30. And the bill date is January 19th, 2027. We expand the category details section by clicking on the arrow next to our category details. So we collapse the items section. And for our category, we select rent, equipment rental, and then we type $6,000. So if we scroll down, we see that this should mimic here. We have Best by Geek Squad, Best by Geek Squad, net terms 30. The bill date is January 19th. The due date is February 18th. Rent, equipment rental for $6,000. Next, it asks us to select save and new. And our next bill is for Allstate Insurance. We have the terms of net 30. We have the correct bill date, January 19th, 2027. And in the category section, we type in prepaid expenses. And then $2,500 is the amount. So we compare what's on the screen, Allstate Insurance, net 30 are the terms. The bill date is January 19th. Due date is February 18th. Prepaid expenses for $2,500. So next it asks us to save and close. So just keep in mind that all bills entered, they either increased an asset or an expense account. And the inventory purchases, they were all recorded in the items details section, and they ultimately increased the quantity of the products as long as we originally set them up as tracked products. And equipment, on the other hand, it was recorded as an expense, and the prepaid insurance was recorded as an asset. So this kind of goes back into the fundamentals of accounting. That is why it is very important to understand the behind the scenes of what QuickBooks is doing. So it helps to automate the accounting process. But again, if it's garbage in, then garbage out. So here it asks us to record the payment of bills, the use of a credit card, payments for items other than bills. And just a quick tip, anytime you have any questions, there are video links in the video tutorials section that's provided by Intuit. You basically go to the preface of this textbook, and then there's videos on how to record bill payments. So in this section, we will focus on recording the payment of a bill for the receipt of services and or products on account, record credit card charges, or record the payment by check for other items. So we continue where we left off. We close out of this. And then the next step is to click on the new icon in our navigation bar. We click Pay Bills in the vendors column as shown. So here we see Pay Bills. And as mentioned, anytime you want some further insight, you just select details for all of the figures that are shown. So a listing of possible bills can be paid appears. So we see this bill for $56,000, another bill for $180,000, $1,750, $2,500, $6,000. So we see all of these different bills that can be paid. So now if we scroll down, click and hold your mouse between the payee and the reference number to drag the right to increase the width of the payee column. So we can basically, make this bigger. Oops, sorry about that. All right. So this is basically just getting us to, make it bigger or smaller if we want to. But in this case, we're going to focus on, paying the bill. So we click on the due date to sort the bills by due date. And we see that this one is going to be due first for Malibu boats. So this is $56,000. So we click on this as it shows us in the figure here. And then we click save and close. So we've now paid a bill for products and services received for which we received the bill. However, often you will pay for a product, a service, or another expense for which we've not received the bill. So sometimes there are vendors, they don't give us any terms and they require you to pay immediately. So these terms are called due on receipt. So for example, if there's a credit card charge for fuel or a check for supplies to record these transactions, we will essentially either need to use the expense task or the check task after clicking the new icon. So we'll look at an example. And here it says to click the new icon, click expense under vendors. Then from there, we type Chevron as our payee. We add new. Then we select save. And then the payment account, we type in MasterCard. We add it. And then this is a form of a credit card as the account type and the detail type. And then we click save and close. And then we type 1/19/2027 in the payment date box. We select the credit card in the payment method box. So we select credit card. And then we select vehicle and gas. So we type in vehicle and gas and fuel in row 1. And then we type $1,600 as the amount. We press tab. And then our figure, our screen rather, should look like this. Here we see Chevron. We see the payment account is MasterCard, the date, the payment method, which is credit card. And we have the category, which is vehicle expenses, vehicle gas and fuel for the amount of $1,600. We select save and close. From there, we select new. We select check under the vendor columns. We type in Verizon. We add new and click save. Then we select the bank account as checking. And we accept 1002 as the check number. In the category section, phone service. And we type in $1,800 as the amount. So our screen should look like this. Verizon, the payment date is January 19th, 2027. Check number 1002. So we scroll down and we select save and close. And then here it states the work you completed in this chapter had an effect on the company's trial balance. You decided to create a trial balance report and investigate the checking, inventory, asset, and accounts payable accounts. And in this process, we realized that the purchase orders do not affect a company's accounts until products are received or services are rendered. So the next thing we'll do, we go to reports. We go to our custom reports tab, select trial balance, and we change the date of the report to January 19th. We run the report. All right, so here we see. All right, okay, I did something wrong. There should be no cash. So just give me a second. 6,000. All right, so there's something going on with the cash account. Let's see. All right, so we'll go through it one by one. So I see that there's something that needs to be offset with the 56,000. So we're going to update that. So we'll start backwards. We have 1,600 for the vehicle, gas and fuel, 1,800 for phone service, 6,000 for equipment rental, cost of goods sold of 131,200, service revenue of 2,000, sales of 164,000, retained earnings of 205,800. Opening balance equity of 0, common stock of 1,000, Long-term business loans of $50,000. Florida Department of Revenue on sales tax, $9,915. MasterCard of $1,600. Accounts payable of $190,250. Accumulated depreciation of $10,000. And then we see this cash. So cash, I need to update that, 223. All right, so we see what our culprit is. The culprit is the cash of 56,000. So here's what we'll do. We'll go to our cash account. All right, so we see this should have been updated. This should be the checking account. So I made a mistake with this. This should have been the checking account. So we select save and close. Yes. So we close this out. We go back to our trial balance. So we go to reports. Trial balance. Again, the date is as of 1/19. Run the report. So there we are, our numbers tie. So this, I'm glad for that error. Why? Because this is one of the main reasons why we actually even, create this trial balance, because we want to see if there are errors, if any. So now our numbers tie, we're good to go. Next, it says for us to click on the check-in account balance, we see the 22,345. So just keep in mind, there's a new view as you see here, but then you can also switch to the classic view as it shows on the screen. So you can do that. The next thing it asks you to do to print it. Then you can go back to the summary report. You can look at inventory. So you can basically do this for all of your accounts. And this basically just provides you with the ledger, right? So the ledger basically shows you all of the different transactions that had an impact on the account. All right. And then again, you can do the same thing for accounts payable. You can do this for any account on the trial balance. So this brings us to the end of chapter 5. So in this chapter, we added a vendor, a product, purchase orders, bills, payment of bills, a credit card purchase, as well as a check payment. And we also produced the trial balance and drilled down through the trial balance to see the effect of bills and payment of bills. And then we also was able to catch an error in the trial balance. So in the next chapter, we will work with investing and financing activities.